Again, my name is Lindsay Staley, and I'm the internal wholesaler with Lincoln for your fixed indexed annuity options. And today, Keith had asked me to kind of go through our product lineup that we offer to you. And I wanted to touch on a few key points. Number one would be our OptiBlend fixed index product suite. Most popular would be the 5-year for your accumulation story for your clients. Next would be our OptiBlend 10-year, which you can use accumulation as well as our income options. Then we're going to touch on our income riders, Linc 2.0 and I for Life. And last but not least, we will head into our long-term care fixed annuity. So first to begin, Lincoln has a lot of product offerings within our fixed and fixed index annuities. We offer My Guarantee, which is our fixed annuity option, a rate set for the client through the term of the contract. We offer New Direction 6, which is another fixed index annuity option, but the rate is guaranteed on the fixed account through the term of the contract. But by far, our most popular option is the OptiBlend suite. OptiBlend was launched in 2015 and has now become our flagship fixed index annuity, and we have never looked back. We offer a 5-year, a 7, a 10, and a bonus annuity. So let me go ahead and scroll to that section just to kind of give you a breakdown of the OptiBlend. So what we use OptiBlend for is multifaceted. It's great for your conservative clients to maybe have cash on the sidelines, to our CD clients, or someone that's looking for a bond alternative. The reason why, of course, with any fixed indexed annuity, the worst you can earn is zero. So if the market is down and the index is zero, but if it's flat, you get to participate in the upside. But I think what really separates Lincoln from our competition is the index options that we offer. So built into the contract outside of the fixed account, you have access. Let me see if I can get this pointer going. I don't think that's going to work. Okay, so I'm going to focus down here. I'm going to scroll in here on our index breakdown. So focusing on the 5 and 10-year option, with OptiBlend 5 and 10, you have access to the 1-year Fidelity AIM Dividend Participation Index. This is our newest rollout within the platform. Fidelity partnered with Lincoln exclusively to bring out this index option last year. And really the theory behind it was to bring a portfolio to this current environment, what we're facing now with the outlook of the S&P returns, the 10-year Treasury, and as we all know, we're looking at an interest rate environment that's going to be lower for longer. So what do we do with that? So Fidelity came up with an index that's built up of 125 high dividend paying stocks, which they use to manage volatility along with the Treasury component, which performs well in a low interest rate environment. So Fidelity is managing the index for Lincoln, and of course, we are just tracking the returns. Again, this operates as a participation, so whatever the account earns, the client will earn up to their current rate of participation. Along with our Fidelity AIM, probably our next most popular index option is the 1-year S&P 500 5% daily risk control. This is designed to give the client a smoother ride. Just like anything with a risk control or hedge in it, the client is not going to experience the highest highs, but they're also not going to experience the lowest lows. So if you have clients that are used to investing in the market and they're ones that like to have a balanced approach, the 5% daily risk control would be a great option for them. And even a combination of the Fidelity AIM and the daily risk control would be a nice mix. And of course, our OptiBlend also offers the S&P 500 cap along with an S&P 500 participation. So really, the OptiBlend suite gives you an option for every client. ones that are aggressive, ones that are true believers of the S&P, and ones that like a smoother ride. Going into what just the OptiBlend in and of itself offers, of course you have your fixed account and your index options, but the client also, starting day one, has access to 10% free withdrawals each year. The OptiBlend Plus is our bonus product, which gives the client a 6% bonus on the initial premium and any additions that are added to the contract in the first 4 years. So this is perfect for clients that really are truly planning to add to their annuity because they could take advantage of that bonus. Otherwise, if you have a client that is really charmed by the 6% bonus, they do not intend to add any money, the OptiBlend 10 may be their best bet, honestly, when comparing the rates. The 5-year, as I said, is our best accumulation story. Strictly accumulation, you cannot add an income rider to the 5-year. However, you can to the 7, the 10, and the plus. So going into our income rider options, got it here. See if we can get there. Okay, there we go. So Lincoln offers 2 income options available to the client. One of the best features about Lincoln, I feel, is the flexibility that the client has. So they can add an income rider at the time of issue, or they can add it at any time in the future on a contract anniversary. I'll first talk about our Lincoln Lifetime Income Edge 2.0, which is our accumulation rider that has the guaranteed withdrawal benefit along with the built-in nursing home enhancement. So how it works is the client, while they're accumulating, their income base will grow by 7% simple every year. Here we have our age-banded withdrawals. So after the client has accumulated, say they're age 65 and they turn on their withdrawal, they are guaranteed a 5.5% payout for their life. Now, they're not just locked in at that amount. Once they begin an income stream, where Lincoln's different, they still have the opportunity to increase their income based on account value lock-in. So even though they've started the withdrawal and they no longer get the 7% roll-up, if their account value on an anniversary at any time until age 85, is higher than their income base, not only will we lock in the income base at that higher amount, but we will also increase their guaranteed withdrawal rate to their current age. So say your client started it at age 65, they're receiving income at 5.5%, and they get an account value lock-in at age 68, we increase that to a 5.8% withdrawal. So you could say they have the ability for their income to rise. However, it's not guaranteed, but it is a possibility. Built into the contract for no additional fee is our nursing home enhancement. So how it works, if the client has held the rider for at least 5 years and they are at least 65 years old and they go into a nursing home, we will increase this withdrawal percentage to 10% of the income base. That will last as long as the client is in the nursing home and as long as they have an account value. This can be issued as both single and joint. And how I touched on the flexibility at Lincoln, even when the client elects the rider and they add their spouse as a secondary covered life, they actually do not have to choose if they want to go through with the joint income until they turn on the withdrawal. So when that client turns age 65 and they included their spouse at the beginning, say for some reason Barbara doesn't want Joe on their income anymore, when she triggers that income benefit, she could say, nope, I just want a single withdrawal benefit for myself. And of course, if you do a joint income, this withdrawal is reduced. So this is our Linc Edge income rider, which is our accumulation and withdrawal. Again, it can be added at issue and it can be added post issue. Next, I will go to our I for Life income rider. So I for Life is what Lincoln has been known for on the variable annuity side for several years. This is our flagship rider. The reason why Lincoln has a patent with I for Life in a private letter ruling with the IRS. So we are able to offer tax-efficient income on non-qualified money. That means the client gets the benefit of a SPIA, but on a fixed indexed annuity. So if they have non-qualified funds and they use I for Life, they will receive their income part principal, part gain, but they still have access to their account value and a death benefit, which are the two biggest things that you're giving up whenever you use a SPIA. So if you have clients that have 1035 opportunities out there and some old annuities on the books and they're ready to trigger income, I for Life would be an excellent option for them. And because in the eyes of the IRS, I for Life is seen as a form of annuitization, we are able to turn on income pre-59.5 without the 10% tax penalty. So that means if you have a client, say they have inherited money, they're young, just 30 years old, we can do this even younger, you can open the fixed index annuity at I for Life, and that client could receive tax-efficient income for their life with no tax penalty. Another feature that is unique to I for Life is we can do joint payouts for non-spouses. So say you have those couples that have just never pulled the trigger and officially gotten married, now they can have a joint income stream. Or if you have business partners that have been in business forever and they're putting together a plan for their future of their business and they need to trigger an income stream, I for Life would be a great option for that as well. And last but not least with I for Life that is not listed on here is probably one of the top selling strategies for this product within the fixed index annuity space is 1035 of a death benefit. Lincoln is the only company that can accept non-qualified death proceeds that are 1035. We can open annuity and add an income rider. No other companies can add an income rider to death proceeds. So that is, I would say, 90% of the conversations that I have when I'm talking about I for Life is 1035 of a death benefit. And the reason why that's huge to agents is say you even have a client with an annuity at Lincoln, they pass away, you write a new ticket for their beneficiary and 1035 the proceeds, we will pay compensation at 100% for that new business. And it's a great way to keep those clients and that money on your books. And I will say I for Life is most known in the non-qualified space because of the tax-efficient income stream. But for an individual IRA owner, that is an option where they can use I for Life. But there's more of a draw and it's more attractive when it comes to non-qualified funds. So we've talked about the OptiBlend suite, the Linc Edge income rider, as well as the I for Life rider, which also can be added at issue and post issue. But the next product that I wanted to discuss, which may come up whenever you're doing reviews with your clients or meeting with a new client for the first time, is our long-term care fixed annuity. Now, this is not the end-all, be-all when it comes to long-term care coverage, but it's a great alternative to MoneyGuard. And the reason why is the long-term care fixed annuity offers streamlined underwriting. So up front, we have an eligibility statement and a prescription drug list that you can review with your client. And you already know by the eligibility statement, if they answer yes to any of those questions, they will not be approved. But if the answer is no and they clear the prescription drug list, it will be a go. there is no phone interview with this, so you won't have to worry about prepping your clients for that phone interview, and if they get nervous, they could possibly be declined, and there's no blood draws. This is non-qualified money only, and we can accept 1035s. So I know one of the biggest things with MoneyGuard is it has to be cash. You cannot accept a 1035, but with the LTC fixed annuity, we can. And how it works is the client puts in their premium, and with the triple leverage option, you put in $100,000 premium, Lincoln kicks in $200,000 of the LTC benefit, and whenever they go on claim, your client will receive $300,000 total in long-term care coverage that is income tax-free. Again, that is $300,000 off of their $100,000 that is income tax-free. And another feature with our LTC fixed annuity at Lincoln that sets it apart from other carriers is we pay out our benefit on an indemnity basis, not a reimbursement. So your client will not have to pay out-of-pocket expenses, save the receipts, and submit that to Lincoln for review. We pay it up front. So that's huge when you're comparing it to other companies. And it's easy to know if you have a MoneyGuard client that you've looked at and the MoneyGuard underwriting is more stringent and they were declined, it would be an automatic decline for the LTC. But if you have a client and you catch them early enough and you are somewhat iffy if they would or would not get approved for MoneyGuard, the LTC fixed annuity would be the perfect place to start because you can scan the eligibility list and the prescription drug list first. And if they are approved for this, then you're good. But if they're declined by the MoneyGuard, they unfortunately would not be eligible for this. And then I just wanted to bring up our rate sheet for the OptiBlend product. So Lincoln publishes our rates on the 15th of every month now. It was previously on the 1st of the month, but starting last month, we started to publish our rates on the 15th. And the reason being, we did this to be more competitive with other companies. So usually they publish theirs on the 1st of the month, and then we can get a feel for where they're going, and then we can publish our rates. So hopefully we can come in higher to your competitors. So just something to keep in mind and to keep an eye out for our rates. And again, we offer rate lock options when it comes to cash tickets and 1035 and transfers. Cash tickets will receive a 14-day rate hold, and 1035 and transfers with the transfer form will receive a 60-day rate hold. So again, we've touched on the OptiBlend 5 fixed index annuity for an accumulation story, the OptiBlend 10 for accumulation along with your income rider options with Linc Edge and i4Life, as well as our long-term care fixed annuity, which is a great alternative to MoneyGuard for your clients. And Keith, I don't know if I wanted to circle back to you to see if you wanted to open it up for any questions from the group.
Okay, yeah. So it looks like Mike was asking, is the i4Life only available as a variable annuity or also fixed index?
I'm sorry, can you repeat that?
The i4Life, that's considered a fixed index, correct? That's not just on the variable side.
Correct, yeah. So i4Life is the income rider, and it started out only on our variable annuities, the option to add the i4Life to variable annuities, but they opened it up to the fixed index channel probably about a year and a half ago. So they launched i4Life in the fixed index, so the income rider that you can add to the annuity.
Okay. And then it looks like the next question would be, is for the LTC fixed annuity, is that only for nursing home or is that also for assisted living as well?
It does cover assisted living, but it depends on the state. And I can send Keith, we have a really nice list with the different state regulations, but a majority of them do cover assisted living. And it depends on if they cover 50% or 100%. But that would just depend on the state. But I will be sure to get that information over to Keith so he can share that with you.
Okay, perfect. I'll wait for that, and then I'll follow up with Mike on that. And that looks like that was all the questions that everyone had.
Okay,
is there anything
perfect.
All right. Well, I appreciate everyone's time, and thank you, Lindsay, for doing the webinar with us.
Oh, yes,
We'll also
you're
be
welcome.
sending out this as a recording file.
Okay. All right. Thanks, everyone. Have a great day.